Good day, guys. This is a continued topic after what we have covered on candlesticks anatomy. Now, we'll go into the ones that we will use almost very frequently because there are many bullish type of candles in the market. So what we'll cover here is that the distinctive type of candles. Let's say we cover these three candles, the ice cream and the hammer. So for hammer, we have a fat and skinny hammer type right here, and then in the color, the body, the candlestick body, it has two colors right here, which is red and green. It signifies that the color is not significant. All right, we'll have to look for some other things in that. Okay, let's say the ice cream bar. To qualify this as an ice cream bar, it has to be 2/3 of the entire range of the candle. The body has to be 2/3. So it has to be around 66% of the entire candle range. So of course, when we call this an ice cream bar, it resembles exactly like an ice cream bar. Well, let's look at the price action characteristic. For example, the price opens right here and forms a new low. The bear push it down, bears. Then the bulls comes and push it up all the way to the market closing session, forming the close price action together with the high. So this represents there's no bearish presence. The bullish commitment has been taking it very seriously. There's a lot of conviction from the bulls, and price manages to close when the session ends. All right, so when we look at these candlestick patterns in this chart, so where we can find this ice cream bar. Now, for example, this can be an ice cream bar. Disregard there's a small wick, which is about probably about 3% of the entire candle range. It's okay to have that. And same here, this is an ice cream bar. This is also considered an ice cream bar. Right, there are three right here. Okay, let's look at the next chart. So this is also considered an ice cream bar. This one, right, there are only two. So let's continue to hammer. All right, for characteristic in hammer, what is more significant is that we look at the candle wick. It has to be 2/3 of the entire candle range. So the body has to be very small, 1/3 of the entire body range, candle range, and then the color does not matter. So of course, it really resembles a fat or skinny hammerhead right here. Right, that's why they call it hammer. And the price characteristics is what we can see, the opening price. Let's say the bears take it down to a very low point, forms a new low. Then the bulls comes in and forms the price higher than the open, and it manages to close at the high. So this means that when the bulls they come and the bears comes and take the price lower until a point that the bulls are ready to take charge. So once the bulls take this up in a very short amount of time, there's a lot of commitments coming from the bulls, and also when the price did not stall right here in this entire movement up, so that signifies a lot of commitment from the bulls, and it manages to close on top of the opening price. All right, so now how about the red pin bar or the red hammer, how it looks like? Well, opening price is high, then took some time for the bears to bring it down, and when it brings it down, then it forms a low, then the bull starts to come in and push the price all the way to the upside in a very short amount of time. Let's say this took about 60% of time to form this low, and then the bears took it up higher of the entire candle range, probably around 80%, and manages to close All right, managed to close the price here, which is very near to the opening price. Okay, so if you look at this chart here, where we can find hammer, right, we can find a hammer right here. Well, after this has formed, then it has sent the price pretty much far up. And then, okay, this is downtrend chart. This is where we can find a hammer, and this happened recently in May. Well, this is a nice bullish movement also as well. A hammer over here also as well. So here is the reversal. Then the price was sent up, and there's a retracement right here. A lot of bullish traders or investors are waiting right here for the price to retrace. Then they take the session higher, and price might continue to go up. Okay, now this is almost the same as the recent chart. Has formed a key swing low right here. Then you can see after this hammer has formed, there's a nice few nice bullish session form, and then there's a retracement, almost like a profit taking. There's not a lot of bears coming in to push the price lower. Then as price continues to form, it goes higher. So now this is a very nice uptrend, and where we can find hammer is actually in this area. So let's say the price has made a very long uptrend, and then most of the traders sees this as a very bullish, healthy bullish trend, and then as price retraces a little to the moving averages, it is known one of the dynamic support, and the investors or traders takes it up further again, and then it retraces again, offers another window of opportunity, and then the investors or the traders, they start to step in and place their long orders, sending the price further up again. So this doesn't just appear in a key reversal areas. That means stocks that has done a very long downtrend, and then it appears somewhere and sends the price up. It also appears in prices where that has been trending for some time. Right. So I hope you have enjoyed the video, and this has actually helped you in the journey. And happy trading and investing. Thank you for your time.